Good morning and welcome to the FINSETA PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll, and then I'd like to hand you over to James Hickman, CEO. Good morning, sir.
Good morning, and thank you for joining us. Just a quick reminder, if you want to flick the slide couple forward. Next slide, please. A quick reminder about FINSETA, what we do. We are a payment services business offering currency and payment solutions to both businesses and individuals. The individuals bit's very important, we'll come on to that. We're regulated in the UK as an e-money institution. We're also regulated in Canada as a money service business. Part of our growth strategy has been very much around utilising our proprietary technology and platform and leveraging that to attract new customers and build out a scalable, sustainable business. One of the key differentials between FINSETA and other payment services business is the way we attract customers. We go direct to market, but via an introducer network, and introducers are such lawyers, accountants, property agents, and such like. All of our sales efforts are focused towards those introducers, and ultimately we provide a very, very high level of service, and that's how ultimately we attract new business and new customers. A very high level of service to both our introducers and ultimately to their underlying customers. We're able to onboard customers with relatively complex needs in complex jurisdictions. We're able to now expect to pay out in currency-wise in over 140 currencies. That's up from 58 this time last year. So we've made significant strides in that, which we'll come on to the progress against strategy shortly. And we've also invested very heavily in both compliance and also into our sales efforts. Next slide, please. So some of the key highlights of H1 of this year. Record revenue with 40% up year-on-year growth from this time last year. Julie will touch on some of that metrics, and actually that number does disguise actually an even better performance than that might suggest. We've, as I say, invested in our sales team. We've grown the number of active clients, the number of introducers, and very importantly, the average transaction value. As I mentioned, we're now able to pay in 165 countries with 140 currencies. We're really expanding our global payments network, and we said in previous messaging that was one of our key goals, is to expand our global payments network. We signed an agreement earlier in the year with MasterCard for the launch of a commercial card scheme. We are going through the final throes of testing with that. Very pleased with progress, and looking to launch that late this month, early October. So very, very excited about that new product that will take us into new markets, with a new type of client base, as well as helping serve our existing clients. You may have noticed that we have renamed the company since our last presentation, from Cornerstone FS to FINSETA PLC. We've also done that with the trading as well, the trading style. Pleased to say it's had no negative impact whatsoever. Renaming a business is always fairly perilous. You never know what impact it's going to have to customers, to staff, but actually with a lot of hard work we were able to sail through it, which I'm delighted with. One of the reasons, it's probably worth touching on one of the reasons we did it, because it's not something you do lightly. Cornerstone actually, as a brand, is very ubiquitous. in the Cornerstone, there are multiple companies called Cornerstone or Cornerstone something else. So it's very difficult to own IP, very difficult to own a brand Cornerstone. So whilst we were at the stage we were at, we just took the decision, actually, we will change the name so we can then have total ownership of the IP of FINSETA, which we now have. And going forward with our geographical expansion, that will help us differentiate ourselves as well. And finally, the Canadian license. Delighted that we were granted a Canadian license by FINTRAC earlier in the year. We've actually appointed a country manager there now. We're growing out, we will be growing out our capabilities. And this isn't, it's, I think, worth pointing out, this isn't just a brass plate office. We're looking to expand out that with sales, with operations, and most importantly, with local banking. We're making good progress on the local banking side as well. Next slide, please. So just a reminder of our strategy. Next slide. We have three core pillars, one of which is expanding our geographic and market footprint. Secondly, enhancing our product capability. And thirdly, one we've labelled future-proofing the business. Now, that's quite wide, but ultimately that's about creating a sustainable business for the longer term. So reporting on progress that we've made against those key strategies through those three key pillars. The next slide, please. As I mentioned, we've been granted our Canadian license via FINTRAC. We are progressing with our Dubai application with the DFSA. That is going well, and we are very hopeful that this year we will be granted full approval. We have expanded our both internal and external sales capability. We continue to invest in that, both in the UK and geographically. As mentioned, we've appointed a country head in Canada. We continue to hire in Dubai. We are expanding out or looking to expand out those geographical regions further. We mentioned last time Hong Kong in 2025, and then from that point we will look at further geographical jurisdictions. Next slide, please. In terms of our enhancing product capability metric, as mentioned, the card program is on track for H2 this year. And we've done quite a significant amount of testing on that card program, and we're very excited to launch. We've actually got cards ourselves now, so actually using that in earnest currently. We've made huge strides in expanding out our global payment network. As I mentioned, going from 58 currencies to 140 is a significant step, and we've done that through partnering with other payments businesses. We're not precious about doing everything ourselves. We will go to best of class in market. Ultimately, to do it all ourselves would take years, be hugely expensive. We're very much a believer that, you know, if we can partner with a business that will make it more efficient and offer a better, ultimately a better service to our customers, then we will do that, and ultimately allows us to offer more to our existing customer base and actually attract more customers as well. And we're continuing to add to those banking counterparties and payment counterparties. And in fact, we're finalising terms with one key one as we speak. We continue, as with most financial services business, compliance is always a focus, and quite rightly should be. We continue to focus on the compliance aspect of our business, both in the UK and overseas. We've improved our customer onboarding process in H1, ultimately leading to less friction for the customer and decreased onboarding times. And we've also implemented some real-time transaction monitoring via machine learning that ultimately will allow a level of protection for customers and a level of security for the business as well. Next slide, please. And then finally on future-proofing the business, touched on the rename. We have done a couple of key sponsorship deals, one with the Ladies European Tour and another with Ultimate Tennis Showdown. That ultimately we are their payments partners. That really goes to show the sort of global ambitions of the business, and also the trusted nature of the business as well. These are two good brands that trust FINSETA to be their payments partner. From a financial point of view, which Judy will come on to in more detail, we've increased profit, increased margin, and increased revenue, and ultimately strengthening the balance sheet through cash flow generation. Final point worth touching on is our platform, and we continue to develop that because ultimately you can't stand still. The customer expectations, customer demand is always changing, and we must change with it. So we continue to develop the platform. We plug in additional counterparties via the use of APIs. We continue to develop our product, for example, mass payments capability, to ensure that we're meeting the expectations of our customers and more importantly, or as importantly, I should say, to attract new ones, and a wider variety of. With that, I'll hand over to Judy for the financial highlights.
Yeah, thank you. You can flip on to slide 13, please, Lily. Thank you. So I'd categorise this first half really as a period of sustained delivery. You know, huge growth in all of the key metrics that you see there. But combined with that, we've also set ourselves up for investing in growth and delivering further economies of scale and efficiencies as we move forward, and future periods will certainly generate benefit from that. I think really I'll go into most of these key metrics over the next few slides, but hope that's a great snapshot to show the progress we've made on all fronts. So starting first with revenue, if you can move on to the next slide. So revenue for the period of 5.1 million, that's up 40% year over year. Importantly now, all of that revenue is direct. So during 2023, we offboarded and fully exited from our historic white label business by the end of 2023. So on a like-for-like basis, that growth rate is actually more like 54% if you take out the white label business from the previous years. And that's been generated by both a growth in active customers, but more importantly, growth in average trade size and revenue per customer. So active customers up 9% to 952, and a 29% increase in trade size. And we've seen growth across all channels, I would say, within our business. Particular success, I would say, in the UK sales team, where we've had the most pronounced growth year over year, and they've really replicated that success in kind of customer acquisition strategy through introducers, and really in the first half going deeper with introducers that we seeded in previous periods. It was also the first full period from our solutions desk. We're pleased with the growth there, and we see a huge opportunity and demand for that. So we're adding additional headcount in the second half to kind of capitalise on that opportunity. Moving on to the next slide, I'd say combined with our revenue growth, our key focus of sweating the asset of our platform, cost control remains a very key focus, and targeted investment into areas where we'll benefit in future periods. Most of that in the first half has been in salespeople, so a 0.3 million increase in sales in headcount. We also have within there our investment into car program heads also there. We've incurred an additional 0.1 million in sales and marketing costs, largely to support the renaming, and we've got some other small incremental increases, really ahead of our kind of globalization. But I think the most important point is that you continue to see, the operating leverage coming through. So 49% adjusted cost base as a proportion of revenue in this period compared to 56% last year, or in other terms, a 24% increase in costs versus that 40% increase in revenue. And if you move on to the next slide, please, Lily, that obviously fueling profitability growth. So one of the areas that I haven't specifically mentioned previously, but is the gross margin accretion. So 65.7 up from 61% in the prior year. Most of that coming from the full turn off of the white label business, and we really should see margins in the future continue to be around that 64-65% mark. But as I say, that stable, focused investment in costs means we generated 0.8 million of adjusted EBITDA in H1 compared to 0.2 in the prior year. A EBITDA margin of 16%. I think it's really fair to say that those investments in kind of future monetization opportunities have been a bit of a drag on that margin, and we'd certainly see that a lot higher if we were reporting on a kind of BAU basis. And then moving on to the next slide. Away from the income statement, so we continue to see really strong cash flow conversion, 0.8 million of operating cash, in line with our adjusted EBITDA, so 94% conversion. You can see here on the graph on the right hand side, we have had a small working capital outflow in the first half, 0.3 million outflow. That's really normally a trend we see in H1, and we should see that definitely unwind by the year end. And then, kind of seeing that in terms of a overall cash flow. If you can move on to the next slide, Lily. So 2.8 million, we ended the period in terms of gross cash. Net cash, that's 0.6 million, net of the 2.2 million loan notes. As you may recall, we've got 200k of that to repay in the coming weeks. That related to an acquisition we made 2 years ago, and then 2 million further loan note to be repaid in effectively 2 years' time, August 2026. So really strong, building of our balance sheet you've consistently seen over the last year and a half. I would just draw out a couple of points probably from the cash flow statement. Obviously, in the period we completed the disposal of Capital Currencies, what was left in that business. So we effectively acquired it, 2 years ago, hived off all of the customer relationships and employees into the FINSETA company. What was left in Capital Currencies was effectively an API license. So that completed during the period, realised 150k in sales proceeds from that. Also importantly, as James has mentioned, we continue to invest in our platform. So 0.2 million in spend in the first half. We will see that grow in the second half. We run things very lean across the company, and we have quite a small tech team. So we are utilising some external resource to deliver some of the really key kind of product and infrastructure developments that we'll see, for example, the kind of straight through onboarding of clients. We've completely redesigned and have tech support, technical capabilities to do a completely touchless onboarding of clients. We're kind of implementing a new transaction monitoring tool. All of this is generating efficiencies for future periods. So as I say, you'll see CapEx nudge up slightly in the second half, but then in future periods kind of return to a more recurring level of about 0.5 million. But I think in summary from me, really strong results across the board in the first half, and we're really excited about the kind of the platform that we've built to kick on from here, delivering top and bottom line growth. Back to you, James.
Thank you, Judy. Next slide, please. So overall, in summary, just to sort of look back at H1, awful lot achieved, I think. Significant growth in all financial metrics in the numbers. The rename completed, and as Judy touched on, at a very, very low cost to rename the business, and everything that goes around that. We've expanded our payment capability significantly, and also introducer network has grown significantly. The agreement with MasterCard is no mean feat, and really, in terms of both product and the business itself, I think is significant. And we've also received regulatory approval to operate in Canada as an MSP. So we've achieved an awful lot in H1 of 2024, and we're very, very excited for the second half and further progress. And that concludes our presentation.
James, Judy, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the right-hand corner of your screen. Just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed by our investor dashboard. As you can see, we've received a number of questions throughout today's presentation. Could I please ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Thank you. The first question, you have ambitions of being a £100 million revenue company. Is it still realistic, and what share price would this equate to?
I can't say what the share price would equate to, but I can tell you that I still believe it's very realistic. I think given the progress so far, the number of the key strategy that we've embarked on with geographical expansion and product expansion, I genuinely believe that's achievable. As I say, to what share price that equates to, I don't know.
I would only add, I think it's really fair to say, we're probably trading at around 2 times trailing 12-month revenue. I think there's certainly multiple accretion there that you would see over a sustained delivery. I'm not making promises, but I think as you compare that to other quoted companies in our sector, I certainly think that other people have higher multiples. Second question, why has seasonality kicked in so early into the growth phase of the business? I'll take initially, and James, feel free to supplement. I think we did highlight that we expected a seasonal half-over-half decline. I think in general we've seen, particularly with the growth of our high net worth individual business, we have seen an emerging seasonality of H2 being stronger. We still project very high growth for the year in full, and probably just see that as an emerging trend now that H2 will seasonally be higher than H1.
And I think that's reflected not just in our business, but actually in most payments businesses and FX businesses. You've always find, certainly historically I've found, that H2 is significantly stronger than H1. To this day, I still don't know why, but that has always been the case. So I don't think we're certainly not alone in that factor of H2 being significantly better than H1. Because it's a very busy reporting day, there's only 2 questions.
I think there's another one coming now. How large is the pool of potential introducers as you look to build your introducer network?
Good question. I mean, ultimately, as I mentioned, our introducer network is targeting lawyers, accountants, property agents, wealth managers, and independent financial advisors. How big globally is that network? Enormous. So ultimately, we are targeting currently the introducers of more global nature naturally for our go-to-market strategy. So we can leverage our relationships here in the UK to other parts of the world. But ultimately, as you go down the scale, you know, there's plenty of small ones, there's some very large ones. It's an enormous market. And ultimately, the reason we've chosen this go-to-market strategy ultimately is because it allows us to develop relationships and therefore develop trust with those introducers and ultimately with those clients. And the better service we provide, the more customers we get. It's very, very simple.
And I will come in. As the business matures, are 30 to 40% EBITDA margins a reasonable target? Without a doubt, I think that, you know, entirely reasonable. That's exactly where I see us sitting in the not too distant future. Can you explain in more detail the opportunities you mentioned regarding the solutions desk?
Yes, so the solutions desk services and attracts customers that have payment issues. Now that might be jurisdictional, i.e. having trouble with current providers or having trouble getting money out of certain jurisdictions because it's more difficult, or maybe getting money into certain jurisdictions that is more difficult. Also, it could be that the industry that they're involved in is particularly it's harder to bank, shall we say? So ultimately, we've invested, as I've said before, very heavily into our compliance and regulatory team and systems to make sure that we can onboard customers relatively quickly in a compliant manner that typically, say, a high street bank may reject, which they do more and more nowadays, and also in a time specific manner. So, you know, onboarding with a high street bank can take anywhere between 3 and 6 months as a business. We typically onboard within 24 hours. So our solutions team are there to basically make life easier for both businesses and individuals who do have payment issues.
What contribution could MasterCard make to the overall business in time?
Ultimately, it could be significant. MasterCard, ultimately for me, is another payment rail. So it allows customers, for example, to pay, business customers specifically, to pay things like Amazon Web Services and ultimately in the digital economy, anything that digital goods and services. So potentially, as that market continues to grow, you know, the card scheme could and probably will make a significant impact to our business.
What does not currently having a local banking license in Canada mean for the business? Hindrance, total stopper, a banking license?
Well, we don't have a banking license here in the UK either. We're a regulated e-money institution. We have a money service business in Canada. Interestingly, that regulatory environment is changing. They're introducing a new regulatory regime called the RPAA, which is the Retail Payments Act, ultimately changing the way businesses like ours are regulated, and they're moving from FINTRAC to Bank of Canada. Ultimately, I think what they're trying to do is mirror the Financial Conduct Authority's EMI environment, so more safeguarding, more security for the end customer. We will be participating in that and upgrading our license when we can do, when that window opens. As for a banking license, we never had any intention and do not have any intention of applying for or requiring a banking license anywhere in the world. So I don't think, in terms of a hindrance, total stopper, I think actually it's the reverse. You know, a banking license, the collateral requirements, the regulatory requirements are just enormous. and it means that ultimately we would be a very, very different business were we to go down that route.
I think the last one, any Web3 happening in FinSeta?
Depending what you classify Web3, but yes, in terms of the transaction monitoring piece that I mentioned earlier, definitely. We are looking at sort of various stablecoin projects that various banks are doing nowadays. And I do think, and this is a personal opinion, this isn't a company opinion, so I will stress that it will become more prominent. So it's something that we're keeping an eye on. It's not something that we've dived into with both feet, because I do feel like we've probably got enough on our plate. We're still a relatively small business, and as Judy mentioned, we're cutting our cloth accordingly, so we can't be doing everything, but it's something that we're keeping a very, very close eye on.
What challenges do you think the business might face in the next 12 months, and how do you propose to tackle the same? Well, I think inevitably, we are tackling global expansion. We've done a lot to prepare ourselves, and both in terms of the team, the technology capabilities to do that. I would say inevitably that does come with some things that are outside our control. So regulatory approvals, for example, can take a little bit more of the time than expected. But I think we're generally pretty well set up, and nothing else really occurs to me.
Now, I mean, ultimately, what keeps any financial services business up at night is regulatory, technology, and under technology, I look at sort of hacking and stuff like that. Those two key things really are the things that ultimately, as a business, we're trying to protect ourselves as much as humanly possible, and that's where we are investing time and money to make sure that that we are protected as much as possible. Ultimately, you're right in terms of geographical. It always takes a lot longer than you'd like it to take, and that's from the regulatory licenses to the banking infrastructure, and sometimes it is frustrating. But ultimately, we have an eye on the end goal. We know exactly what we want to achieve, and I know we'll get there.
How do you prioritise new markets, and what time frame do you expect to see a return on investment? I think the ones that we've identified have come out of, as we've already mentioned, our global partners, meaning that we have a clear line of sight to revenue, and I think where they naturally complement our existing client base. I think I can say in terms of metrics as a CFO, I'm looking to turn a profit in the same year, and probably pay back over a year and a half, just to kind of give you some idea of where we're at. And I think that's testament really to the how we want to sweat the asset of our balance sheet. Being quite early into our profitability journey. So I think we really see a very short kind of route to profitability in all the markets that we're going after.
I mean, I think to add to that as well, when we're looking at new markets, new jurisdictions, we have a very clear business plan. Ultimately, we are controlling costs. We're growing revenue. So to make sure that the return on investment time frame it's not jam tomorrow, it's today. Ultimately, we need to make sure that the time is relatively short, that we're getting a return on the investment, and revenues pretty much straight away.
Yeah. Could wallet of
cold wallet.
Could wallet of cryptocurrency
I think that,
happening in?
I think that was to the reference of stablecoin.
Yeah.
Ultimately, we're not licensed for crypto. We don't intend to be licensed for crypto. We are currently would explore, like everything, quite a lot of other stuff we do, through partnership. So it's not happening today. Having said that, we explore quite a lot of these things, and as I mentioned, the most likely route would be through partnership.
going to rattle through some of these now. Any thoughts re M&A? I think we're quite happy that we've got the best opportunities within our within our own plans right now. However, I think we take an opportunistic look at M&A if anything comes up that would benefit us.
Yeah, I think on M&A, for us to look seriously, it would need to be sort of game changing for us. I don't think ultimately we'll be looking at adding just clients. It would need to be more than that. Were we to partake in any M&A activity, so it would need to move the needle significantly. We're very focused on our strategy and delivering against that strategy, but ultimately, never say never, and it's something that we do genuinely look at. But as it stands at the moment, there's nothing on the horizon.
Yeah. Just conscious of time, so looking at some of the if there's any themes. I think generally I've got a few questions around kind of outlook for 2024 and compared to last year, issuing several updates around kind of trading ahead of expectations. I think as a business we've always said that we like to not surprise but overachieve. We don't like setting out lofty expectations. We like to have a clear line of sight on our outlook, and that's certainly something that we're very comfortable with where the analysts have us for 2024. We are, I think naturally you would expect as we launch the card program, as that becomes solidified, as we get our banking relationships cemented in Canada, as we get that full approval in Dubai, I think you'll certainly see 2025, 2026 probably some updates of those numbers as those things that are somewhat kind of out of our hands as they solidify and we can flow those through into the numbers. Anything else that you want to add there, James?
No, I think that's right. Yeah. We've been. Yes, I think it's a fair comment that we're conservative, but I do think it's sensible to be conservative, and obviously we're looking to overachieve.
Yeah. Understand that FINSETA is generating interest income from clients' funds, and this is reporting under other operating income. Is it mandatory for FINSETA to return these money to clients in the form of cashback? Is there any intention to do so? So it's certainly not mandatory. In fact, it's not allowed under the EMI license. You have seen in the market some people, particularly, for example, Revolut, giving it back or an element back to customers in terms of cashback, but interest specifically is not allowed under our EMI license. I don't think there's any intention to do so right now, because that, quite frankly, where we're generating that income, it's not meaningful anyway, but it is where we are providing solutions to customers who are looking at us not as someone who's paying interest, but who is providing a payment solution for them.
I would go beyond that, actually. I think the regulator, the FCA, looks very dimly on any sort of quasi-interest-bearing instrument, whether it's cashback, whatever, when plainly the money is on deposit. So I think it would be treading a very fine line with the regulator, and that's certainly something we're not prepared to do.
I think, as I say, you're seeing it probably more in people focus a bit more at the kind of retail level than certainly ours.
Yeah.
In the next 12, let's just do this. I think we'll take the last one because we're getting ahead of time. What catalyst should investors look out for in the next 12 months, which show that the business is growing sustainably and in a shareholder-friendly manner?
Very good question. I mean, the key metrics obviously is pre-tax profit. Obviously, we've got to make money because it's not sustainable if you don't make money. So that's obviously one of the things to be looking out for. I think delivery on our strategic objectives, I think that's very, very important. And for investors to say, okay, I buy into the strategic direction, can they deliver? And I think ultimately, if we're delivering against those strategic objectives, then that's obviously a key benchmark to be looking out for as well. And I guess the two key strategic things is the geographical and the product piece. Yeah, we take one more.
The last one. Do you expect to be a net beneficiary from a fall in interest rates, given your interest income will fall? Absolutely. I think that's very fair. I mean, we do see some, not just in the kind of the interest rate environment, opening up other investment opportunities, and therefore a reason for people to move money, but also, socio-political kind of factors as well. All of that, as I say, can be a catalyst for money movement, where we will undoubtedly be a net beneficiary.
I think you've got time for that material this time last year.
I think, yeah, this time last year you had several material ahead of market expectations update. Why is there not getting the same this year? I think, I've kind of mentioned before, we initiated coverage with Shore Capital, I think in October last year. I think prior to that, we didn't have very comprehensive analyst kind of coverage. So I think expectations in terms of the market has been more equally set, have been more fairly set, should I say? And as ever, we continue to take a kind of a measured approach to where we set our guidance.
Last question.
The last one?
Capital allocation priorities does the business have in the next 12 months? Ultimately, it's set against strategy. So the capital allocation will be very much against geographical, against product, and the sustainability of the business, and ultimately continuing to develop the platform. So those are the three things that really for capital allocation that we're looking at. And all of that is under the umbrella of revenue, which is people, salespeople. I think that will cover it off.
James, Judy, thank you for answering all those questions you can from investors. And of course, the company can review all questions submitted today and will publish those responses on the Investor Meet Company platform. Just before redirecting investors to provide you with their feedback, which I know is particularly important to yourself and the company, James, could I please just ask you for a few closing comments?
Yes, so I mean, it's very pleased with H1 performance. Significant progress against strategy made. Genuinely, the MasterCard agreement, the license in Canada, very, very meaningful. The rename sets us on a course. So we've made significant progress in H1, and I'm very much looking forward to and excited about H2 and reporting further progress when we can.
James, Judy, thank you for updating investors today. Now, please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of FINSETA PLC, we'd like to thank you for attending today's presentation, and good morning to you all.
Thank you.